Different presentation for us. In as much as analysts, we do market models and forecasts of the industry as part of our job every year. It's normally something that we share with our clients and don't do big presentations on. This year is a little different. We're publicizing our 2013 market model and forecast a little more broadly because when we were putting it together, we found it to be, frankly, a lot more challenging than in years past because we were dealing with apparently contradictory market indicators, and it took us considerably more effort to go through the rectification of all of the different inputs into the market, and thought it would be an opportune time to share with a broader audience the kind of methodology that goes into these models and forecasts and how we came to the numbers we did. It's also the beginning of a somewhat expanded partnership or support of Intersect360 Research of the HPC Advisory Council. You can consider this to be the first in a series of presentations where we're planning to share more of our data and insights with HPC Advisory Council members, and that's a partnership we're looking forward to continuing to grow as we move forward. I'll endeavor not to repeat data or presentations from one to the next too much, but this is the first time we've presented any of this here. Selected key findings just at the top level from our market model and forecast. The high-performance computing market reached $30.5 billion. I should have translated these to euros for this chart, but I apologize that I didn't. $30.5 billion for 2013. That's up 2.5% year over year over 2012. 2.5% is below the growth that we were originally forecasting for 2013. It is still positive growth. The big thing that slowed it down that was outside of our forecast methodology was the increased government slowdown. Really, worldwide government spending has been weak, but in particular in the United States, the government shutdown considerably slowed spending in the U.S., and then we've seen an extension of the Eurozone crisis throughout Europe, keeping government spending suppressed. That has an echo effect into academia to the extent that any academic organizations are reliant on government grants to fund their HPC programs, then you get an echo effect onto academia from government. We do see this recovering to a 4.6% compound annual growth rate so that the market will reach $38.1 billion by the end of the forecast period, the five-year forecast through 2018. Now, it's important to note that this is all product and services spending. It's well beyond the servers, which are about $11 billion of the market, but it also incorporates storage and software and cloud computing and services, other things like that, and I'll come back to that throughout this presentation. It's also incorporating different use cases, both what we call high-performance technical computing, which is science and engineering types of applications, which is about 70% of the market, 69% of the market in 2013, as well as high-performance business computing, which is our nomenclature for non-scientific business applications, particularly finance, online games, ultrascale internet. I'll come back to some of those distinctions throughout the presentation. Servers are the largest individual segment and will continue to lead in absolute growth. However, they are declining in the share of spending, so it's hard to say they're becoming less important. They'll remain the number one product segment within high-performance computing throughout the forecast, but we do see that percentage continuing to decline. There have been significant changes in the server vendor shares. There are a lot of particular dynamics going on in that part of the market right now. Again, this is something we would normally reserve only for our clients, but it's so different 2013 from 2012, and with more changes ahead, we've chosen to comment on it here. And then finally, we get an awful lot of questions on cloud. This is a segment that maybe has the most discussion relative to the size of the actual market and how much money is getting spent. So we'll spend some time today double-clicking on cloud. It is having a noticeable, measurable effect in the market model. It does have the largest growth rate of any of the segments by quite a bit, but it's building off of a small base. We'll reach $1.4 billion in 2018. Okay, so topics for discussion. The total HPC market model and forecast I'll give some of the more exact numbers, the individual growth rates by segment, talk about the HPTC versus HPBC breakdown. But importantly for this talk, I'll ask you to suffer through a couple of slides on the methodology and how we add up to those numbers, because I think it's important for this part of the discussion. I'll try not to dwell on it too long, but we do find it to be important here because we've had these conflicting indicators that I've mentioned very briefly. The first conundrum is that we notice that Intel's revenue for HPC, and they're the dominant processor vendor, as came up earlier. They're in 80+% of the HP systems out there. Intel's revenue was significantly up, markedly up for high-performance computing in 2013. You would think that would carry a lot of the servers along with it, but if you add up the top server vendors, collectively they're down. So that presented the first head scratcher for us, for the industry, as to how to rectify those pieces of data. We do look to end user surveys, the demand side budget guidance. This has really been a guiding light for us. The extent to which we can return surveys from a wide range of HPC end users, in particular in this case with respect to budgets, but also with regards to individual technologies, installations, trends, always are the guiding light of our research, and we rely on that here. We also have to model in the effects of ultrascale internet or hyperscale, depending on how you like to call it, the effects of big data, and of course I mentioned the effects of cloud. We'll rectify that, show how all of it adds up in a way that makes sense. We'll do a special discussion of HPC in the cloud because it gets so much interest, and then wrap up with conclusions. Hopefully I'll have time for questions at the end. Okay, here's the first big money chart. This is our market model and forecast chart. You can see it's got 10 years of data on it. The left-hand 5 years, 2009 through 2013, you can consider those to be actuals. I think this is my laser up top. Yes? Wonderful. So these on the left you can consider to be actuals. The right-hand 5 years, 2014 to 2018, will be our forecast. 2013, we reached $30.5 billion. That eclipses $30 billion for the first time. Out to the left, you can see 2009 was the particularly weak year. That was during the worldwide recession that really hampered spending. 2008 was higher than 2009 if we go a little further back, and then before we rebounded in 2010. You can see that servers are the largest segment at almost $11 billion in 2013, followed by software at $6.5 billion. Software also has one of the larger growth rates. The market will reach $38.1 billion in 2018. That's a 4.6 compound annual growth rate. And you can see the cloud there in orange toward the top. This one here is one of the smaller segments, and it's been small, but we do see this starting to take off. We're getting some market indicators now in our forecast and demand side data about people talking about increasing the proportion that they're planning on spending on cloud in high performance computing, starting to grow. So that will reach $1.4 billion in 2018 according to our forecast. Okay, this is the same chart, but looks at it just according to share of spending. So if you took all of the bars and made them equal 100%, and you can see the relative shares. Servers have been, if you go out here previously, in the high 30s in spending. They're down to about 35% now and continuing to decline into the low 30s throughout the forecast period, with a 4% compound annual growth rate overall. Now, everything here is growing. Cloud, of course, has the highest growth rate, and that's on a small basis. Within the more mature segments, storage has the highest compound annual growth rate with 5.2%. There's nothing that's lower than servers other than this other category up top, which is a bit of a garbage collector. It's other things that end users report to us that don't neatly fit into the other categories. Probably the largest component within that would be clients or workstations that get considered part of the HPC environment and are paid for out of an HPC budget. But there are any number of things that could wind up in there. Okay, methodologically, where we find high-performance computing. This is an important chart for this audience because ISC does tend to skew a little more toward academia, government research. Of course, we have commercial components here, but we consider high-performance computing to be quite broad. We're looking at commercial use cases of high-performance computing, including both what I mentioned as the HPTC and HPBC segments. Now, first of all, high-performance technical computing, we're referring to applications in science and engineering. These can be commercial. There are plenty of commercial industrial organizations that do science or engineering. Automotive manufacturers, pharmaceutical companies, energy companies. These are commercial organizations doing science and engineering applications. They are part of our HPTC methodology. High-performance business computing is for the non-science, non-engineering business applications of HPC. Financial services is probably the largest segment here. Here's a vertical breakdown of that using the 2012 numbers. These are being updated for 2013 for our clients, but the shares won't change too much year on year. But you can see that of the 70% of the market in 2012 that's high-performance technical computing, 41% of that from here at about 12 o'clock down to here at about 4 o'clock are commercial segments in biosciences. These two manufacturing segments, large product manufacturing, consumer product manufacturing, it includes EDA, it includes chemical engineering, it includes energy, are all part of this commercial slice. The government slice largely divides between things that are research labs, that's this blue bar here, plus you could consider some of these national agencies in this light green to be more research oriented. The distinction here with a national agency is rather than it being a general purpose research lab, it's typically more single focus, like for example the National Cancer Institute in the United States we would consider to be a national agency in this case. Then the red slice are things that are more defense oriented. The national security orientation. Then, of course, there's a large academic slice. We don't endeavor to divide that down. Of course, academia looks at all different vertical markets, but academia in general tends to be shared resources, shared labs. Except down at the entry level, you could have individual departments from chemistry to astrophysics that buy their own individual clusters. Nevertheless, these are hard to separate out into vertical markets. We tend to view academia all as one chunk. Now, on the business computing side, this is maybe the biggest difference between our methodology and other analyst methodologies in this space as to whether or not or how much you include here. Mostly you don't see this side of the chart included in other analyst numbers, or if they are, they're much smaller. We see financial services to begin with as actually the largest commercial segment. It's a little bit larger than if you put these two manufacturing chunks together, just barely. It's really up there with manufacturing as the largest commercial vertical market in high-performance computing, looking at applications in trading, in risk management with Monte Carlo simulations, pricing, analytics. It's a big chunk. We also look at the servers behind online games, like, for example, if you're looking at World of Warcraft, which has, 12, 13 million players worldwide. There are real-time I.O. requirements in those servers that require high-performance configuration. Media and entertainment, we look at this purple segment here, Ultrascale Internet, is really the one that merits the most attention here. Really, I'll come back to it, but that's the supercomputers that you would find at, say, a Google or a Facebook or Amazon or eBay, and I'll come back to that slice. Not all of our clients like it. If you don't like it as an HPC segment, feel free to ignore it. HPBC does have a higher growth rate than HPTC overall. That's the red. That's because it's commercial driven. Largely we find it's really that commercial has a higher growth rate than public sector, academia and government right now. If you're comparing the commercial in HPTC to the commercial of HPBC, you'd find they're quite comparable. Okay, so in terms of methodology and how we put together the market model and forecast, how we get to some of these numbers. We've been doing quarterly end-user surveys for 7 years now, since we were founded as Tabor Research. That includes 2 surveys that we do annually. One is called our Site Census Survey. It asks you as the end-user community, can you please tell us, if you can, everything that you have installed and how long you've had it, right? Servers, processors, operating systems, middleware, networks, storage, end-user applications, the works. We collect data on all of those, put them together into annual reports for our clients. And then even more important for this particular conversation is our budget map survey, which allows end users to tell us about their budgets at a high level, whether they're growing or shrinking, and then what percent of their budget gets consumed by different categories or different items within a category. This gives us 7 years of really well triangulated data of, for every dollar getting spent on servers, how many dollars go to storage, how many dollars go to system administration, power consumption, developer tools, middleware. We have good budget data over 7 years from the user community tracking trends there about what goes where. It does get very different by segment, in particular for software. How much a university spends on software can be very different from how much an auto manufacturer spends on software. We use by sector averages to construct a lot of our market models. So then, in order to build the market models, if we were a different kind of analyst that tracked an individual technology like, say, smartphones, right? The way you would do it is you call up all of the manufacturers of smartphones and you send them a spreadsheet and say, can you please fill this out for me to tell me how many units and how much revenue you did last quarter for all of your different models. They would do it, and then you would put that all into a master spreadsheet and sell it back to the same companies for $60,000 a year. It's a great model to be an analyst. It doesn't work in high-performance computing because high-performance computing isn't an individual technology. You don't go out and buy 1 unit of HPC. You're comprising it of all these different technologies, servers and processors and storage and networks, etc., software. And then confounding that, for the bigger players, the large public companies, HPC tends not to be a separate business unit. If we went to IBM or EMC or Cisco or Hewlett-Packard and asked them, could you please tell us for all of your different product lines how many units and how much revenue you did specifically for high-performance computing accounts according to this methodology? One, they would have no idea. They really don't track that inside their company. They don't know. Two, if they did know at all, if they even thought they had an idea, it would be illegal for them to tell me or even give me any kind of guidance at all, because it's illegal in the United States under the Sarbanes-Oxley Act, and in other countries under other similar acts. You cannot give analyst guidance on something that's not at the business unit level. So, one, they don't know. Two, if they did know, they can't tell us. The smaller companies tend to be private and don't release public data at all, which leaves a few companies in between that are large enough to be public and are mostly dedicated to HPC, not entirely. SGI, Cray, Mellanox get most of their business from HPC and are public companies, but between them, that doesn't add up to a whole lot of the market. So you have to make inferences. You have to do a lot of research and build a market model. This is how we do it. We review the annual reports of the larger companies for their business unit level performance. We model how much of that we think is going to HPC according to their own profile and according to our survey data. So we do survey analysis of end users of technology and budget trends. We have qualitative discussions with the server community, with the vendor community, and with the end user community about what they think is happening in the industry. We consider macroeconomic things like what's going on worldwide politically and economically. We don't try to forecast major macroeconomic changes. We don't say, well, what if Korea, went to war with the United States? We kind of leave that out of it. And if it's already happening, we'll consider it. And then everything is heavily salted with analyst opinion. It's our job to just tell you what we think based on everything that we've seen. There's a URL here with the full methodology notes. Step by step what that looks like, and this is the job of Chris Willard, my partner, our Chief Research Officer. He carries the yoke of this. Step one is he evaluates the budget growth data that we collect from the end user community by sector. What does academia say their budgets are doing? What does commercial say their budgets are doing? We evaluate those economic segments, divide them into the sectors. We try to forecast the different macroeconomic activities. That's 2. 3, we look at it geographically. Is the data different in North America versus Europe, etc.? 4, we try to formulate supplier level opinions, looking at the business unit level performance of all the different major suppliers, particularly the server vendors and the storage vendors, and separate that for HPTC versus HPBC. We do a product class uplift of if we settle out servers, what does storage look like? What do networks look like? What does software look like? Heavily reliant on our budget map data. We cross-reference all of the verticals, doing individual growth rates for all the different vertical markets. We cross-reference the different server classes. What does entry-level HPC look like versus mid-range versus high-end versus supercomputer? And of course, when you forecast all of these different segments separately, when you add them up, they still have to add up to the same totals when you add them each way. It's no good having them come up to different totals in different years. They have to all add up according to all the different segments. So if you're going to have Europe have one growth rate and North America have another, and biosciences has one growth rate and academia has another. When you add them up, you still have to get the same totals everywhere. And there's a little bit of algebra involved. You can do that, but it's an important step. And we do these independently for the HPTC and HPBC sides. So normally that's not that bad because when we look at the different indicators, they have until last year always generally agreed with one another. We look at what the vendors think they're doing or what the business units are doing, and they tend to comply with what end users say that they're seeing. Even big things that have happened like the flooding in Thailand that disrupted the storage market in 2011 was also reflected in our end user budget data, where all of a sudden people were spending less in 2011 and a lot more in 2012. It dropped right out of the data. 2013 all of a sudden went haywire. Intel, who's the dominant processor vendor by a lot, reported very strong growth, 7% or higher, but as I mentioned, this vendor performance on the server side was weak. IBM was the number one server vendor in 2012. They had very poor performance at the business unit level, the business unit that contains their HPC products. HP was relatively flat, actually slightly down. Dell had 2 very strong quarters for half the year, but then went private. So that's the last you're ever going to hear reported out of Dell. So we had 6 good months and then silence. And then the other vendors, SGI, Cray, Bull, Fujitsu, etc., had mixed results, some up, some down, but none of them individually big enough to really make a big market difference. So overall, we're looking at Intel up, the other guys collectively down. The end user budget data was up in commercial, basically flat in academia and down in government, and we need to consider the effects of ultrascale, big data, and cloud. So you start with this bucket of inputs and go, what do we think the market did, right? In particular, the supplier review looked like this. The Intel Data Center Group, which contains their high-performance computing division, they started with about 75% high-performance computing processor share. That's not including accelerators, okay? Accelerators, different ball of wax here. I'm talking about the microprocessors. Intel Really huge growth here. Quotes from their annual report. Net revenue from the DCG operating segment increased by 7% in 2013, and they specifically call out high-performance computing as a major driver of the growth, which implies that they're looking at 7% or better growth for HPC in that segment. Meanwhile, IBM was down significantly. The business unit had a $3.3 billion year-over-year decline, or about 20% at the business unit level. That doesn't necessarily have to map one-on-one to HPC, but it's hard to say that the HPC would be up in a business unit that's down 20%. HP reported a 4% year-over-year reduction in revenue. We think that HPC is actually up slightly within that, but very slightly. That the rest of the business goes down, HPC comes up. Dell, as I mentioned, very strong 6 months, and then we believe that continued throughout the rest of the year, according to our survey data and other indicators. The budget map. Academia, as I said, was relatively flat from the budget map survey indications, 1.4% year over year. Commercial was up 4.3 year over year. Government was down 3.3 year over year, primarily due to the U.S. government shutdown. The commercial sector is really what's driving the growth here. And the other question that people answered for us in the budget map is, how much more or less do you think your budget will be 2 years from now? So this is not a compound annual growth rate. This is a 2-year change. So really 4.3 to 8.4 is fairly consistent in terms of a growth rate going forward, but you see government rebounding to where it's flat to up, academia rebounding to where it's some slight growth. So we've got some positive indicators in the forecast going forward. Now, the Ultrascale Enigma helps us, what we called the Ultrascale Enigma, helps us unknit some of the apparent disconnect here. Going back to the supplier review, well, I'll do it here. Ultrascale has been a rapidly growing portion of that high-performance business computing market, and it almost even doesn't quite fit there. We're considering now whether to break out that ultrascale internet into a third pie. So we'd have high-performance technical computing, high-performance business computing, and then hyperscale to the extent that anyone wants to consider it. From an analyst definition standpoint, we define it as it's running applications that we don't otherwise consider to be HPC, except they're being done at a level of scale that implies the use of HPC or supercomputing technologies, which is to say, if Google were doing the same thing at 1/1,000,000th the scale, it wouldn't be an HPC application. But the scale they're doing it at implies that they've got supercomputing technologies, and we know that they've got supercomputing going on there. They've bought companies that we were tracking as part of the HPC space. They have executives who we used to know as part of the HPC space. Google absorbs these, and then you don't really hear from them again because they become highly secretive. And you can say the same for Yahoo, Amazon, Facebook, and others. If you're going to call those things supercomputers, and really they are, then you need a segment to put them in. That's this ultrascale internet, or some companies call them hyperscale. That's this segment. I also like to refer to this colloquially as the Chuck Norris segment when we advise our clients. You don't come and find it, it comes and finds you. It's very difficult to intentionally sell your technologies to this segment. They are heavily and increasingly a build versus buy segment. They're continuing and increasing the pace at which they bypass traditional vendors of storage or server technologies and go directly to component providers in order to build their own systems. This is actually part of the disconnect between Intel and the server vendors. If you really break down Intel's numbers, what you see is that companies like Facebook are increasingly bypassing a traditional server vendor and going directly to Intel or other component providers for what they need in order to build these systems. When that happens, IBM, for example, IBM's revenue goes down, Intel's revenue goes up as you grow those things, and IBM just gets cut out. That can actually account for a fair amount of what you see going on here. It is going to create an interesting dynamic where component suppliers can be increasingly competing with their own customers who are the ODMs, and this is having an effect on the HPC market. Okay, so in terms of adding it all up, the demand side data, I mentioned it being a guiding light. This has really led our research for the last 7 years, and we have to start from the philosophy that the end users know what they're talking about. We have a broad enough cross-section of users in different segments that there's not any big segment that we're missing. I don't think there's any real sample bias in terms of the people that we survey have better or worse budgets than the population at large. We have to go from the budget data from the end users is basically right. It can be a little off here or there, but it's basically right. So then why is Intel so high and the server vendors are so low? Well, one, Intel's dominant, but not 100%. They still had room, plenty of room, to get revenue growth from simple market share gain. And looking at our surveys carefully and the performance of IBM Power Division and AMD Opteron, we think that's exactly what happened, that Intel may have gained as much as 10 points of market share from about 75% to about 85% over the course of 2013. That'll inflate your number quite a bit. When you add to that the ultra-scale effect of people bypassing server vendors but still giving the business to Intel, and then a little bit of an effect that comes from cloud to the extent that anybody would have run something in a cloud on a hyperscale Amazon kind of infrastructure rather than a traditional in-house infrastructure. That is enough to explain the gap between Intel and the server vendors. There's about an 8-point gap, right? But about 3 or 4 points come from the market share gain, and the rest come from that ultra-scale and cloud effect. And then it starts adding up. You do it by sector, and where it leads us is to have the government down 2.4%, academia up 2.9%, commercial up 4.6%. That makes HPTC up 1.6%, but really that's the commercial is up and everything else is below that. And high performance business computing is up 4.5%, which is kind of right on that line with commercial. And here's how everything adds up. Now, I drag you through the methodology. I'm not going to do all those steps. Believe me, we've done them. Chris Willard especially put in a month of effort on this market model, and I met with him several times on it. We're very happy with how all this triangulates out. Now, there is something I need to spend extra time on in this chart, which is storage. This minus 2.3 is not really for real. That's an artificial effect. I mentioned in passing that Thailand flooding in 2011. 2013 is the first normal year, quote-unquote normal year, since that flooding really disrupted the market in 2011, 2012. The floods were in the second half of 2011. But the effect of it was that a lot of revenue failed to get recognized within calendar year 2011 and was delayed and effectively recognized in early 2012. A lot of revenue. And we had this both from end users and from certain vendors confidentially about this effect. We feel confident about it. And the net result of it is, from a storage perspective, you can think of 2011 as being a year that only had about 9 months in it. And then 2012 was a year that had about 15 months in it. And now you're back to a year in 2013 that has only 12 months in it. So if you smoothed it out, if you took 3 months of that revenue from 2012 and shoveled it back into 2011 and smoothed the line, you would see that storage revenue had a 7.4% compound annual growth rate from 2010 up to 2013. It's just that it Zorroed around in order to get there. It went wham down in 2011, up in 2012, and then back to normal in 2013. Does everyone get that? Right? Believe me, I wish that we didn't have to go through this. The only problem is it actually happened. And if we're going to report the actual revenues, right, then we kind of have to do that. It was weird. Another great quote from Chris, my partner. He says, the problem with doing a forecast is that your forecast, in some sense, has to be bound by what's realistic, whereas reality has no such restrictions. Right? Reality can do anything, and then that's when you go to the actuals, and then that gets weird. So, storage looks like it's down. It's not really, well, I mean, it is down for 2013 from 2012, but go back to that strong compound annual growth rate that was 5.6 for storage. Storage is one of the best segments there is out there. Okay, I mentioned vendor shares. How am I on time? Vendor shares. IBM had a bad year. They were clearly the number one server vendor. Every year we've been doing vendor shares, and they were 30.6% in 2012. HP was number 2 and very close with Dell. Was number 3. If you go a little further back, Dell was the number 2 vendor in server vendor share. HP overtook Dell as Sun exited the market or Oracle exited the market. HP was the primary beneficiary of a lot of that share, and HP overtook Dell. Dell and HP both gained share from IBM. Dell gained more than HP did. It actually puts HP in the funny position of having gained 1.5 points of share, but having gone from the number 2 to the number 3 vendor at the same time. Although really, these three are now almost 3 even quarters, and then a quarter of the business that's everybody else. Now, when IBM and Lenovo break out, and that was another thing that hurt their business, by the way, is people knew that was coming. As IBM and Lenovo split out the x86 business, really it's lined up for Lenovo to become the number 3 vendor, and IBM, what's left of IBM on the power side, will be number 4. Big data. Big data is huge in high-performance computing, all right? Everyone has these big data initiatives. It's a huge percentage of spending. You heard earlier presentations of we have to put big data into the proposal because that's how we get funded, right? That's all very real stuff. We look in our big data studies, people are spending an enormous percentage of their IT budgets overall in HPC, not in HPC, on big data. But, so far, this is largely not aggregate additional revenue in the market. It is entry-level big data deployments tend to be on systems I already have, with data I already have, with people I already have. I might forecast that I'll grow it, but I'm not spending substantially more. When we try to break this down, and you look at an HPC installation like, Oak Ridge or anybody saying, well, I got this great new big data machine. Well, if they hadn't bought that one, they would have bought a different supercomputer. It's just this one is called big data, and they got about the same amount of money for this as they would have gotten for some other supercomputer. Big data has not yet had a big aggregate effect on the HPC market, but there is a long-term pull of HPC technologies into new markets with big data. We would absolutely advise our clients to have big data stories. It's a big deal. It's going to have a huge play for high-performance technologies. It just hasn't raised the revenue of HPC thus far in our market model. Now, HPC in the cloud, which is my big finish. Believe me that this has been a major focus of our research over the last several years. We ask about cloud in every survey that we have. We ask about it in the site census, in the budget map, in our big data studies. We have done separate, detailed, comprehensive research studies on cloud. Our clients love cloud. The vendors all have their cloud stories. We hear cloud is a major thing. It would be, let's use the word popular, for us to come out with a huge cloud number and a big forecast. We could sell that a lot. We would make a lot more money putting a really big number on cloud and inviting people to buy that forecast. The only problem is that we can't find it as true. Our data has been very consistent on this in terms of spending data, installation data, every way we look at it. What is growing is the percentage of users who are doing some HPC in public cloud, some non-zero amount. I'm doing something in public cloud. That has grown to 35%. It's actually 36% in our most recent budget map survey. It's 35% in our most recent big data survey. So again, consistent between surveys. But the proportion of the overall workload they run in the cloud tends to be very small. It's about 5% on average. Now, when we look at the budget map data, we get data that suggests that about 2 to 3% of budget goes to cloud. Well, 5% of 35% is 1.7, right? 1.8. So it's right in there. It's pretty consistent. We've got multiple triangulation around how much money is being spent there. Cloud adoption is greater in public sector than private. Academia, government, more likely to be doing HPC in the cloud than the private sector, individual companies. I get it. There are cloud conferences, there are cloud case studies, there's the Uber Cloud Initiative, there's ISC Cloud Conference. Most of this is around, here are presentations that show case studies of HPC in the cloud, and they're great, and we love them, and they're very viable. The presentation tends to be around the theme, I can cloud and so can you, right? And they're trying to prove the veracity of HPC in the cloud, which they do. But applying that to a forecast is very dangerous, okay? Because you're looking for it specifically. You're going out and saying, how many people can I find who are doing cloud, which is not the way to do an unbiased forecast. It's the same as saying, A, vegetarianism is a really healthy lifestyle. B, I can name a lot of vegetarians. C, therefore, soon everyone will be vegetarian, right? It's this problem where the last leap is you're saying, well, the vegetarians, which have become a trend, are the clear leaders and they're going to drag everyone along. The reality is people will continue to grow their cloud deployments, but they will strike a balance of how much of their workflow do you want to keep in public cloud. Moreover, the cloud portion that's $613 million in 2013, which is growing, this includes not only public cloud, but also certain, very specific private cloud installations if my HPC budget is renting infrastructure from central IT on a utility basis, but it gets marked in my budget as cloud, not as a system purchase. Then it can wind up being a private cloud that gets recorded looking like a public cloud installation. Still, most of that $613 million is going to be, the biggest thing is going to be things like cycles or infrastructure as a service. Amazon is the leader, followed by Google. Users in surveys are indicating their cloud usage is going to grow. Cloud usage is going to go up. It's going to go up as a proportion of the workload, but it's not going to become pervasive. More importantly, again, this is not a net new revenue generator. We do not see any kind of market increase in the overall size of the HPC market because of cloud. Now, I hear you cry, I can point to a case study of a new HPC user who's come to the market and doing HPC for the first time because of cloud. I grant you there have been 3 or 4 of those that are well publicized. They are by definition the smallest of small volume users. The amount of money those users spend is not enough to move our forecast in the slightest. There's not enough net new usage of HPC that wouldn't exist otherwise in order to move the market. Not yet. Maybe by the end of the 5-year forecast there will be. Okay, in conclusion, challenging enterprise environment. Enterprise has not been good overall, but HPC continues to be a growth market. It's a solid growth market. Commercial markets are leading the way. This is still HPC. I get it. Universities, academic labs, government labs like to think of that as a different kind of thing, but it's still high-performance computing. Don't abandon HPC or saying you're not doing HPC because of that. The cloud market is growing, but from a very small base. If you've got a cloud solution, the concern is we find cloud to be over-competed for the size of the opportunity that it is. There are a lot of different competing cloud solutions out there. Competitive model definitely evolving, especially on the server side, also in storage with different acquisitions and partnerships. Overall, this is a methodology-driven thing. You have to do a lot of research to come up with this. You can feel free to disagree with us. We've put a fair amount of research and work into it. We hope our clients will appreciate our guidance. If you're on the end-user side, we'll invite you to participate in all of our studies and give you access to all the research we have if you'll fill out surveys for us. We look forward to continuing to partner with the HPC Advisory Council on this. That concludes my presentation. Thank you very much. 45 minutes on the nose.
Any questions for us?
Yes.
So have you looked at any of these outboard PCI bus extenders like one-stop systems? Seems to me for certain GPU-specific apps, that could take a big bite out of the server market. I mean, you can stick like 16 GPUs in there, and they all enumerate correctly. They just show up as a monstrous PXI extended PCI bus.
Yeah, so the question is really about GPU-centric PCI extensions that take HPC and become a separate HPC system. Those are out there. They've not really come up to any kind of huge share in our surveys yet. I agree with you. They have the potential in the entry-level and mid-range especially to enable some adoption, but I wouldn't put any kind of major forecast in it. I would not say they're going to take a huge bite out of anything. Where they're most likely to get their adoption is going to be in engineering-related segments in the entry-level and mid-range, particularly through the burgeoning sector of essentially HPC consultants that deal a lot with these commercial organizations. One thing I like about the Uber Cloud case studies, if you read them, is if you really dissect them looking for where the entry-level mid-range adoption is in commercial and HPC, you see the effect of these HPC consultants helping people do that kind of adoption. And I think they're the kind of people who would really get the most benefit out of that kind of application because they can handle the application optimization for it. Yes?
So we just have a 30-minute break, so maybe we can go over a little bit. I'd like to hear you talk a little about software, because that's several $1 billion.
Yeah.
We get the detail there. My guess is that a lot of that is, I'll say, scheduling. That maybe that's just because that's what I know. PBS Pro and LSF are probably big parts of that. And there's this big drive, I think, in the market. There's a big force to go, for instance, Slurm, which is a lot lower cost. It's kind of like a commoditization happening in the software market. Is that what you think is happening?
Let's see. Well, it was not just one question. It was several questions. You're essentially asking me to break down the software market here, which we can do. And it would be could be a whole separate presentation. But let me start from the standpoint of, yes, there are a lot of different components of that. We're looking at operating systems, developer tools, middleware, end-user applications, software, end-user applications or ISV, commercial licensed ISV applications, and even in some cases transfer costs where basically the HPC or product group in a company is paying a software development group in the same company to develop the software. This happens in the pharmaceutical industry in particular. We'll find that model. So there's some of that in there, not a whole lot. It is something that really widely varies by segment. If I put up this chart for academia, the software portion would be almost nothing. Academics don't pay anything for software. Where it's really heavy is in engineering-driven fields because that's where the ISV applications dominate, and we can find manufacturers who spend 3 times as much on software as they do on hardware. The job management space tends to be fairly consistent with the exception that academia goes all open source. You're right, there's a lot of commercial things like platform computing and bright computing and adaptive and commercial versions of Torque and things that are in there. If you want the next question, the next part of your question, and then I'll just sort of punt the rest, is the transition to open source. Yes, there's a lot more of it that's transitioning from licensed to open source as a general trend across all of those spaces, with the possible exception of operating system where mostly it's already all open source anyway, although it might be commercial supported open source. OpenFOAM, for example, is one of the fastest growing or the fastest growing individual application in our site census survey, taking share away from commercially licensed codes like Fluent, right? Moving over to an open source alternative. That is also happening among job schedulers, resource managers, and the like, and is part of a trend that we're tracking. Contact me later for more details, and we'll have a whole separate call. Did that get you close enough there? All right. There's also a question of how much I can do by memory without getting Laura and Chris to open the database and have it in front of me. Laura Segerval and Chris Willard kind of do all that.
Well, I guess it's a suggestion, maybe not to you, but to the advisory council, that session or one or two of these farther out in the future, that'd be a good topic for you to talk about that.
Be happy to. Other questions? All it is coffee now. You can even stand up and get a coffee while I'm answering questions if you want. It won't bug me in the least.
I've got another one. It has to do with your comment, I guess, from this morning about the big red bars there, is storage, and you said that's a market that nobody seems to want to seize.
Yeah, I kind of skipped over that because I was short on time. The thing is, storage vendor shares are really disaggregated. Server shares are hard enough. Storage shares are very tough because there are a lot of OEM arrangements, first of all, where someone will resell someone else's storage and you have to kind of unknit that. And second of all, the leaders in this space are, from a revenue standpoint, are enterprise storage vendors that aren't really focusing on HPC. They're just selling a lot of it incidentally. So from a market share standpoint, if you push me to do the market share leaders, they're going to be NetApp and EMC with HDS a tick behind that. And then you start getting into the ones that you really think of as HPC storage. IBM would be there, in there, I believe, fourth. And then by memory, I couldn't tell you whether it goes to Xyratex or DDN. I think DDN is ahead of Panasys, but they're all in there in different places, right? And then you have SSDs to account for, you have tape to account for. It's all part of the storage market. It's not just spinning disk. So we've got models of that for our storage clients. But what I meant by it is, by the no one seems to want comment, these enterprise storage vendors, the large ones, you can't get them to say anything definitive about HPC. NetApp just had a big loss of people who are E-Series marketing people. I really don't believe that means they've abandoned high-performance workloads from an E-Series or portfolio standpoint for NetApp, but they're going to look only at the commercial markets, and they pulled right out of ISC, which one analyst in particular might have told them was a big damn mistake. But NetApp's not here, right? Why not? That's stupid. And then you get EMC acquired Isilon, but they haven't really integrated it. HDS acquired BlueArc, and that's the last you ever heard of BlueArc, right? So you have trouble getting a good strategy from those guys. Now, down below that, you have the Xyratexes and DDNs and Panasys, and they'll sing a good HPC song, but they're smaller than the big guys, and it's kind of wide open. I'm sorry, you said Seagate?
Seagate acquired Xyratex.
Well, Seagate acquired Xyratex, and I'm going to be very careful with this with the cluster store people in the room. Officially, that's all business as usual and is all walled off inside of Seagate. And I believe that, and I haven't seen anything that's really monkeyed with that. It would be a reasonable argument to discuss whether or not Seagate would sell off the cluster store division to somebody else in order to avoid competing with their own downstream OEM competitors. The official story is that that's not going to happen. That's credible, I guess, but if you want to have a discussion about whether or not it would happen, it would be a reasonable discussion. And the cluster store people are frowning at me about that. There it is. Your competitors are going to say it, right? If you're DDN, you're out there and you're going to say that's going to happen, and it's hard for you to defend against. I'm sorry. I'm just doing the market perception of this stuff. I love you guys, but I'm saying the discussion's going to be out there. Is it going to happen or not? You guys go answer the question. Do you want to say something, Wendy? Are you going to fire me now? Right, they're doing great, right? And Credo's great with the Synexion line. There's no damage to the cluster store business or any of that right now. That's been a fine acquisition so far. It's just a question of how is it going to be integrated or not integrated over time.
Addison Snell, everyone.
Hi!